directly to all my contact information, my emails, phone numbers, everything. And the most importantly, my calendar. Guys, if you guys schedule a time on my calendar, I'll make sure I always prioritize my calendar top. Meaning that again, whether it's a meeting, whether it's a phone call, guys, when I say I cover all of GFI, can you imagine me getting every or all agents throughout GFI when I get calls? So if I don't get to you guys right away, just give me a little bit. But again, anything that's ever on my calendar takes top priority in my day. So feel free to use the QR code, reach out to me in any way that I can be here to support after today's training. So I want to make sure I do that there. You guys already know what Ethos is at, right? But I want to always start off with the basic recap here, right? We're a technology carrier, a provider that's able to help you guys and issue your business and policies as quickly as possible. This is what we're changing the game. Our technology in partnership with other companies that we take our technology, combine it with products that are already killing it in the market, carriers that are A+ rated carriers already, again, providing products to clients, and we merge them together to be able to bring you cutting edge technology to get clients protected faster than ever. We're talking about 10-minute applications, zero medical exams on our platform, guys. And when I mean zero medical exams, I literally mean it. Doesn't matter the age limit, doesn't matter the count, the coverage amount that you're going for. If it's a product or policy in our platform, there's no needles with Ethos. So no blood work, no urine work, no exam, no examiner coming out. All our platform does is review the existing medical information that exists on the client. And that's how we make our best decision for the client. That's how we're able to do applications with 90% instant approval at the point of application. Literally sitting down with 10 clients, 9 of them, we could come up with an instant approval option for them. Again, all of it 100% online. So you don't have to print anything. You don't have to send out anything. You don't have to fax anything. I heard an agent had to fax something the other day or send something in there the other day because he didn't have it. Can you imagine? You have to. Who here still has a fax machine that's available? Give me a thumbs up in the chat if you have one, right? I probably won't see anybody. Oh, you never know. There's always one person, right, that likes to keep up the antiques. But again, we don't do that. Again, best case scenario, you probably scan it and email it and do it that way. But can you imagine you fax something in? Because that was the next option that was available, guys. Everything's 100% online, keeping it a digital platform here because this is the world that we're in, right? Keep it as simple as you can. The time that you guys have with your client is already valuable. So we need to maximize that time, right? I already know the trouble or the hassle you probably went to making sure you got the lead, you got the conversation, you even got the appointment, whether you're a seasoned veteran like Cindy on here, where she probably spits out appointments like nothing, right? Or whether you're starting off and just saying, hey, it just took me days to get this appointment. I want to make sure I maximize this. This is where the platform comes in to making sure you can have the best conversation and get that client protected as soon as possible. And we've been able to do that for you guys from the beginning. It's in the initiation of GFI. We were there from the start, helping you guys out, listening to what you guys needed, and we've added more products to our platform since our start with you guys, right? From term insurance to term with living benefits to final expense products that we have in our platform to index universal life. We already have a protection focused IUL. But you guys already wanted. We were talking to Marty, we were talking to Field Force, Eric, everybody's like, we always needed an accumulation focused IUL. So you know what? 2 years worth of work to making sure we created the right product for you guys, partnering with the right platform to making sure we add the new accumulation IUL that still has the same instant decision options on this one, up to $2 million in coverage, to making sure we're properly protecting the clients that you guys are working with. And again, we just didn't want to pick anybody off the rip, right? We just didn't want to just go out there and say, hey, you have an IUL or you have one. We worked partnered up with a company that you guys are know and love right here at GFI. I heard that GFI is some North American junkies here. They love riding North American products. So why not partner with Ethos and take this relationship to the next level, right? Now we're creating partnerships within this, guys. You guys might see carriers, you might see people competing on stage, but Ethos is here partnering up with carriers to really push the mission of what you guys are trying to do. Get families and people protected at the end of the day, right? We're just trying to make it as convenient to make that happen. And if North American already has an amazing product, Let's just use our technology to get that issued as soon as possible. And this is where this partnerships come up to create this accumulation focused IUL with the product with the foundation of North American backing it. And guys, this just launched January 7th. But before we launched on January 7th, we had a beta run. You guys already have leaders that were able to test this platform out well before the product even launched company wide to everyone. Right now, you guys all have access to it, but before that, people had to test it out. They got great reviews so far. It took less than 15 minutes, start to finish. Can you imagine sitting down doing an IUL start to finish and getting it taken care of in 15 minutes or less at that point in time? Guys, this is the speed that the platform's been able to do. We again, because it's so easy, we're going to shift to train on your Illustrator first. We're creating an Illustrator, a platform that's easy and convenient, whether you're a seasoned agent already in the field or you're somebody new that's coming up, that you can literally switch your training to our platform to help agents learn how to write an IUL. Guys, I always say when it comes to an IUL, you guys are architects. You guys are designing something for somebody's future, right? What they're planning for their finances later on. The success of an IUL is all in design. So you as the architect got to make sure you're designing the right product. So we created this amazing illustrator to keep it super fast, intuitive, and again, user friendly as possible, whether it's from the client side that's reviewing the policy or you, the agent side, that's actually creating the illustration there. So you can already see exactly where that's coming into play. Let's talk a little bit more about the product. Again, an IUL that has up to $2 million that you can do in coverage in as little as 10 minutes. This is literally where we're setting the limit here, 10 minutes. Again, even less in situations where you can come in once you go. I've had agents that are still pulling up from the beta and say, Jorge, I can knock this out in about 6 to 8 minutes now because I've been able to do this many applications. So look at a process that you can set it up. Once you know the platform, you'll be able to navigate it even faster than ever before there. Truly instant decision that can happen at the point of application, smooth on, and we're also keeping it incredibly competitive. We've had agents compare it directly to the North American platform and like, all right, why wouldn't I just submit to Ethos? It's literally close to the exact, if not the exact same, right on the exact same money. What you're getting is the speed. Instead of having to go through the underwriting and the rest of the process with North American, this is where Ethos is really coming in, right? Backing it by that strong carrier, giving you guys more customizations than ever to be able to create the right product for your client at the end of the day. And again, we targeted this product for clients that are looking for higher accumulation. We talk about accumulation because someone that's more focused on their cash value growth is exactly where this product is going to shine. If you got somebody that's looking for death protection focus or more focus on that side of it, that's great. We have an IUL protection focused IUL that you can combine it with even a term to create even a higher death benefit if that's the route you want to go. But someone that's really focused for a strong accumulation, this is it. And usually that comes in with a clients with higher income. They want to make sure they're funding it or adding more to their policy than just the base amount. So make sure they're getting the most growth out of their policy. Good to moderate health and credit that can be able to qualify in this option. And again, what their true interest is at the end of the day. Really, that tax deferred compensation they're going to be receiving in their retirement or whatever plans they have in play, right? Whether it's a short term plan or a long term plan, this is where the accumulation focus IUL is going to be focused on to making sure you find the client that suits it best. One thing that we've expanded on is the age. The other products, every other product on the Ethos platform starts at age 20, but we've actually expanded this one to go down to age 18, getting it closer, getting started as soon as possible for someone to be able to get that protection. At this point in time, we don't have anything for juveniles. I know that's a common question that I get as well. So on our platform, the minimum requirement, the minimum age for an IUL is 18, and then other products on term start off at 20. So at this point in time, we don't have a juvenile focused product. But we can see, even on this fund amount, we can see the different face amount that depending on age, it's what's going to allow to see what you qualify for that face amount. That 18 to 50 that can take you up to $2 million, 51 to 60 that will take you up to 1 million there, and that's 61 to 65 up to 250,000. So this product also has a cap in age can only go up to age 65. So keep that in mind as well when you're writing for your clients at the end of the day there. Minimum face amount of 25,000 has to be enforced there to be able to set up the policy. All states, and again, Cindy already alluded to it, except for New York. And again, we know New York is a whole thing, but we don't do business in the state of New York. Oregon and California are coming soon. So stay tuned for the announcement because, guys, as soon as I know I announce California, you guys are going to go wild with this product because I know that's what you guys are waiting for. But the crazy thing is, it's already blowing up even outside of California. If you're any non-resident that you have, or for those like Sydney alluded as well, if you're in New York, cross the bridge, go over to Jersey, go over to Pennsylvania, see where you can get your non-residents and still be able to do business for those and get them qualified under the product. Underwriting options, 5 different risk classes. So we have 3 non-tobacco that can come into play. That's standard, preferred plus. And then we have 2 tobacco classes, literally a standard and a preferred tobacco class that can be followed under that option there. And again, this particular product also is only available for US citizens and permanent residents only. If you have clients that are falling under a foreign national rule, that have ITIN, they're here on a work permit, on employee authorization, a visa, this is not the product for them. We definitely do have products on the Ethos platform to be able to help out those clients, but it wouldn't be on this platform. So if you have any questions on foreign national, if you how to qualify those clients, shoot me a message separately, shoot me an email, and I'll let you know what clients actually, what products are available for those clients there. But this one's going to be available for US citizens and permanent residents. So we got the base here on the coverage. Let's jump in a little bit into how the indexes, what the indexes are available on this product. Right off the bat, we have 9 different indexes and a fixed account to select from. So it gives you guys a lot of options to diversify the growth within the product or really fine tune it to what your client's looking for or the strategy that they're open to take based on these indexes that are available. Everything on the illustration pages does have the historicals on these indexes, so that way you and your client can make the best decision on which indexes you want to make sure you select. And honestly, if you want to reach out after management, there are annual point to point on most of these that can be changed out annually if your client chooses to go a different route or select a different strategy. We've already selected 2 indexes off the back, S&P 500 and that high par fidelity. That option is going to be split 50-50 allocation between these 2 indexes that we've already pre-selected. So these are always going to be defaulted. This does have a cap at 10.25 on that S&P, and there is a floor available as well on that 0.25% as well for that S&P. So again, giving you a little bit more peace of mind for your client if they want more protection. And if you want to change that allocation, guys, this is where the customization comes into play. You can do up to 100% in either one index, split it between different indexes, as long as your total allocation comes up to 100. And we'll talk about that and show you when we go into the actual illustration. So you can kind of split it and play around with it in any way that you choose to on those resources there. So, and a lot more resources are available as well on this, guys. I'm going to make sure I send you guys the full link as soon as we get to the demo, where you can find all the materials that we're discussing on the presentation and everything on these factors, so that way you guys can read up on this particular product if you guys have more questions on that. Loan options as well, 3 different types of all loan options. So we know that the fact of having an accumulation is having access to that cash value. But how can we take advantage of that cash value? By different loan options, where there's standard loans in year 1 that can be available, or again, variable options that can be started again in payload policy level year 3, or fixed participating loan options, which would be a common one, which is going to be where we default in most cases. Remember, IULs do need a time to really brew, right? We need some time to make sure to grow, specifically depending on how much we're adding into these contributions to getting them started. So if there are emergencies that are needed early on, and if there's funds available, these are the different options. Or again, the long-term route, when you're actually illustrating the disbursement, the distributions, we're actually going to see that defaulted on that fixed index participating, because usually those are going to be year 11, if not later, into the policy that we're going to see that. So different options that you can do, the interests that are going to be that are going to be charged for those loans, as well as loan bonus, as you guys can see. on the participating loan side of it, meaning that even though you're taking, there's a little bonus to make sure that we're adding a little bit extra growth to limit that again interest that's being accumulated on that loan. So helping the client out to maintain whether they're going to pay back completely or they're just going to take that distribution. That's how they're going to make sure we take it. So those are the options there. Riders and options that are available there. These are the additional riders. So at no additional cost, it also comes with living benefits. Guys, living benefits are huge these days. We know the importance of having living benefits because again, we're not just worried about what can happen after. We want to make sure what can happen in life as well. So living benefits covers three different options of chronic, critical, and terminal illness that can accelerate up to 90% or $1 million for qualifying conditions on those options. Also, we have that preventative lapse option. So again, for clients using the policy for their income, we want to make sure that we're preventing it from lapsing. A lot of clients might be their first IUL. They might not know exactly how it works. So if we end up taking too much out of that policy to cause it to lapse, guess what happens? Then it's not tax deferred, right? Then Uncle Sam's going to come knocking on the door and say, hey, I need my cut too on this one because it falls outside of those mixed protections here. So we want to make sure there's a built-in preventative lapse rider onto the policy. And something that's also exclusive directly with Ethos, as you're not getting with North American, is our Ethos estate planning. Our estate planning comes included with the policy as well. This is going to give clients an access to our platform to create a legal will, power of attorney, living trust, medical consent, and a healthcare directive. Guys, five important documents that, again, if they're already taking the time to making sure they're planning for for anything that would happen, we want to make sure that that money actually gets used exactly how they choose to use it. So, and this is what's available there, and that's going to be an extra bonus that's going to be included at no additional cost of the policy. Additional cost options that could be added, something like waiver of monthly deductions. This is a rider that can be added for qualifying disability. So if someone were to become disabled, this is something of an option, guys. And this is where you really qualify your client to see, hey, is this going to be very resort? Is this going to be a benefit for them, right? We know disabilities can come in different ways. So if we want to make sure that their policy is being covered if they're under a disability, this is something to do. I was working with someone that said, hey, I got some people that work high risk jobs. They're roofers, right? They're on top of it. So I want to make sure that we added the disability, right? So if they were to fall down, they were to become disabled, they're not working. And most of those guys are laborers, right? So I want to make sure that their policy is covered for those disabilities if they needed to be covered. I had another example with a guy that was working with athletes. They created a policy. Guys, athletes can have a disability too. Something can happen on the court. Something can happen outside of the court. Something can happen. So if they know you're coming in from a risk class, this is where you add it. You show them the value of having this waiver. Say, look, if you were to have a disability, this will help cover your premium to making sure you can still keep your policy. That way you don't have to worry about one less thing if that were to happen. So again, what we talk about? You guys are the architects of the IUL, so right? So you guys have to make sure you're designing it correctly to exactly what the client needs. And these are one of those options of making sure you're creating the right product for the client. There's also an option for an accidental death rider, so you can add additional coverage if you choose to add additional coverage within the IUL. One thing that you're also available, even though you're getting the IUL with Ethos, if the client still wanted to qualify for a term after, they can always apply for a term. But again, if they want to apply for a term, you always have to make sure this policy finishes issues first before you apply for the next product. So don't make sure you're not applying for them at the same time. If they're looking for more than 250,000, or if you want to look at it from a different perspective for coverage that they can add for their policy there. So now we're talking about the riders. Let me jump into the living benefits in a little bit more detail. Guys, I'm gonna clear my throat just a little bit because I'm finding a little bit of cold and just getting over. So give me just a whoa. There we go. Back at it. All right. So close up with the living benefits. At no cost, accelerated death benefit here. Like I said, 90% if major illness strikes. I always say it's called life insurance, not death insurance, right? So illness can strike in life. So we want to make sure we get access to this while we're living. That's why we call it living benefits, right? Critical illness, chronic terminal that can pay you up to 90% or $1 million, depending on the condition, depending on the options, or even care. Chronic options, where again, if someone can't do their daily two activities of daily living, we want to make sure we get this advanced so that way they can get the right help that they need. They can get someone in there to help them out. And these are the options that are going to be available for them in the policy. Guys, North American has amazing options for their living benefits, how you guys can actually activate these living benefits, guys. So there's a lot of great options that you guys can do directly with North America. Even if you're not even in the country, as long as you have medical records to state for your illness, they can trigger these living benefits for you guys, even living abroad in some cases. So keep that in mind, how important it is that we selected the right company to partner with that can still help out their clients, even if those situations there. So we see the option there. So now we talked about who Ethos, the new product that we brought into play. Let's talk on some of the new options that we've also come in, right? How we're creating more sales and keeping things moving for you guys from the Ethos side here. I already said we did fast applications throughout the single platform. Now you're adding one more resource under our platform instead of having to go to different platforms to create these policies. Now you have a platform that can either do a term of living benefits, final expense, two different types of IULs. So we've added this under one single system, but now you're able to do easy activations, everything from our platform that we've even created a new illustration process on this particular product that we didn't have available before. If you're familiar with our current IUL, we've already had the express solves within the product. This is something simple that, again, if you're not going to be fine tuning into the numbers or really playing into some of those additional features, or maybe you're newer to the illustration, we've created some easy things, whether it's a smart solve that gives you guys a good balance between protection and cash value, or someone that's more focused on what this product is designed for, which is max cash value, strong growth potential focus. And guys, that's where the platform is actually defaulted. So whenever you start, it's always going to default to max cash value because this is where the product's going to be focused. But if you also want to illustrate those distributions, right, that retirement income, choosing the max retirement income is going to use the same strategy as max cash value, but now it's also going to be able to illustrate receiving those distribution or whatever age they selected. So there. And on top of that, we also added a new feature called Custom Solve. Under this Custom Solve, this is where you can actually play with the illustration software a little bit more, creating non-level premiums. You can even add 1 year lump sums into the product. So within the first 6 months, you can drop in a lump sum into the product and do that within the illustration. Custom disbursements, custom targets, again, the surrender ages, custom illustration rates. Guys, there's so much customization on there, guys, that I haven't even used every feature that's available and how to customize because we've given you guys more options and everything that agents have been asking and saying, Jorge, we need this. This is how we do our illustrations. This is how I do this for my clients. And this is what's kind of set us apart. So whether you're newer and you're going for the express solve, let the system take care of the solution for you, or you're a veteran, you already know what you're doing, so you want to jump in straight into the custom solve and create these, you have that option and that power that you didn't have before on our platform here. Additional resources that we also have. One thing that I point out, it is agency rocket friendly. So again, if you guys are taking illustrations and jumping it into your agency rocket, you want to make sure that as long as you've selected max retirement, or if you did custom, you've also selected this disbursements, it's going to be able to upload that PDF directly into to Agency Rocket to be able to give you those numbers that you guys are looking for, right? To make it easier to be able to help out your clients, show those comparisons and how it's growing. So it's already available there. On top of that, we have a new also import illustration feature, meaning that if you work with a client today, let's say you send them that illustration, they decided not to move forward, but you know what? I see Audrey over there said, hey, you know what? I just spent an hour working on this illustration for the client to say no, that's fine. As long as they have that PDF, Audrey, they're going to be able to say, Audrey, you know what? I changed my mind. I'm ready to move forward. If they send you that PDF, you can just upload that back into the platform and you don't have to worry about recreating it. The software automatically recreates it from that PDF. So that's where that import illustration. So it has to come from the existing illustration you created, and the software will rebuild it without you having to spend all the time in creating all those specific targets and specific customizations that you did before. So a new feature that we've also added into the platform there. And we've also, in the illustration, change the pages. We want to make sure we customize 5 simple pages that you guys can see. Easy ways to illustrate, easy way to recap the policy with your client, to go over everything in those 5 additional pages. After the 5 pages, then it breaks down right into the North American policy breakdown that gives you all the additional options. For the first 5 are going to be the custom pages that have been created to keep this simple, from client name, agent name, the premium that's going into the policy, the coverage that you're going to have at initial, and as well as the projected cash value with the assumption rates is going to be a simple and clean. Again, when we run the illustration, we'll go over these pages here shortly to show you guys those features there. So guys, you can see how we've gone easier than ever to be able to go faster with accumulation IUL, faster with the Ethos platform, and now offering the strength of North American to be able to back this product up and give you guys more support and give you guys options up to the $2 million. And guys, the resources are not just with me. We partnered up with North American. So sometimes, guys, you'll see me with the North American team going over this. I go to the city tours. I go to hang out at their tables now. They come and hang out at our tables because we talk about the product, and we have support on both sides of the platform here. Just depending on what stage you are in the application or where the client's at, it's going to depend who they reach out to. So any application questions, anything pre-issue while the policy is still in process, it's going to be Ethos related. Once the policy is in force, all of that's going to be managed by North American. So after it goes in force, we've already taken the one pay. If they need to make any changes, any updates, then they have access directly through the North American portal to make all those. And you have their team, their wholesalers that can help you guys answer any questions on that side of it, whether it's our support side, if you're early on or after post issue, they want to change banking, if they want to make updates, that's where they go directly to North American to making sure they get the support from that side there. So you can see the updates there. And then lastly, I want to show compensation, guys. This is the big one that I want to make sure we talk about, right? Fast compensation within the platform that we're trying to do. So our normal situations when we talk about, all right, I'm loving this product, but let's talk about what's real, right? Compensation process, what's going in place. Well, so when it comes to true ups or lump sums into the products, agents are paid immediately once the lump sums are actually confirmed up to the target premium that was received. So meaning that I told you guys within the first 6 months, you guys can actually drop in a lump sum. So if the lump sum didn't drop until month 3, then we can't compensate you on that lump sum until month 3 when that actually hits, right? Then that's when we accelerate the rest of that compensation there. We're only going to be able to accelerate what we can at the point of issue. Ethos handles the initial payment processing for the client. So that first payment, we process it to our side. Second payment now gets processed through the North American platform, and then they handle it from there. So because we handle that initial premium, comp release is after the contract has been submitted to the carrier, the first payment is successfully processed, and the policy has been e-delivered. So all of these conditions have to be taken in place for it to actually pay out and release comp. Time frame for this process can be 5 to 6 business days. So we're talking about, let's say we closed the policy on today, right? This morning I did an IUL. So there were 5 to 6 business days away before we can release. If everything goes smoothly in the sense of the banking, the process, obviously today's a holiday, right? So banking probably won't process today, they'll process tomorrow. So keep those in mind when you're processing, or over the weekend, they probably won't process until Monday. So again, 5 to 6 business days, then we would pay out. So if you close a policy today, they will most likely pay you out by Monday of the next week. Then within 5 to 6 business days. If not, again, sooner by Friday, depending on which point you fall into play. So that's how you can see how that comes into play. Compensation is all seen directly through your GFI portal. No compensation is shared within the Ethos portal. So please make sure you take on top of that. When it comes to carrier appointments, you say, all right, I'm already contracted with North American. That must mean I'm ready to go. You're ready to go directly with North American. So everyone's already pre-contracted with North American Ethos in our platform. The only thing is you're signing in for the first time. There's going to be a little blue box at the top of your portal that says start contracting. That's what triggers your pre-contracting. And you just kind of fill out a couple questions, where your license, name, and basic information. Once you fill that out, then it triggers the pre-contracting and lets North American know, hey, someone's coming in, they want to get a contract. But until you submit your first policy, you're not contracted with us yet. So we have a just-in-time appointment process. So our platform is going to let you submit, create an illustration, submit a policy, even if your contracting hasn't completed. So under that first contract, that first policy, that's when we trigger with North American. They're going to process your contracting and process that first policy. So that first one might take just an extra day or two longer, just because we're waiting on that contract to clear. But once it clears, then everything from there rolls smoothly. But you do need to submit that first policy to finalize your contracting with us. Outside of the state, so we know that it's not available in New York, Oregon, and California. One state is a little bit different. So if you guys are in the state of Pennsylvania, for all my Pennsylvania licensed agents, when you submit that little blue box for requesting for Pennsylvania, you have to wait until we get your license before you're able to submit your policy with Pennsylvania, if that's the only state that you're licensed in. If you're licensed in others, then you can select non-resident and trigger the contracting that way and get that process started on that way. So I want to point that out for all the Pennsylvania agents out there. So a lot of great information. Hopefully you guys can see the amazing value that we have within the product, the new options that we have available here. And before I jump into the demo, I'm going to take a little swig of water and see if there's any questions that you guys can answer on just the platform before we jump into the demo here. So I'll open it up and I'm going to check the chat to see if there's anything there.
I think we're good, George.
I don't see anything, so give me the extra 10 seconds to clear my throat. So, guys, if I sound a little raspy, I apologize about that too. So, let's jump into the demo here. Let's see here. So these are the resources page. So I'm going to drop this in the chat so you guys can have that saved in your bookmarks. And this is going to take you everything. Could you possibly provide more information on disability? Deborah, we could talk a little bit more on the disability options. Actually, the resource link that I just posted on here is going to take you directly to those options, whether it's the full training that I just covered, agent one pager to know about that, and knockout guides that are going to do disability and qualifying conditions are going to be directly through North American on what triggers disabilities in the sense of what, as long as you've been classified as disabled, not necessarily physically, they can come into play. If you're not at a point that you can work, those are disabilities that would trigger that monthly deduction rider that we talked about earlier. But here we also talk about the knockout options that would disqualify clients. So all of these different options. There's an interactive demo as well that you guys can go on that place there. The demo guides, rate sheets, everything that we have going on, even client options. And again, I'll talk about this cash incentive because you guys are still in the running here. So I want to make sure we get to that here towards the end. So you guys can see all the resources in that link that I just dropped in the chat. So I want to make sure you guys have that there. So let's see another approximately. When do you expect? Man, I would wish lose. I had a real good answer. I'm hoping end of Q1, beginning of Q2, but we're just waiting on California. I know last time that we launched our term with living benefits, it was pretty much early Q2 when we got the notification on there. So or when we went actually fully live. So fingers crossed it comes in sooner. But we're just waiting to hear from directly from California and see what happens there. Okay. All right. So let's jump into the illustrator here. My page is going to look a little bit different. And if anyone is Ethos login looks anything like mine, you need to stop immediately and reach out to me. Because if your ethos does not look GFI blue or has a nice GFI logo at the top left hand corner, you need to stop and make sure you reach out because everyone's GFI portal should be that. So until somebody recruits me, mine's going to stay green and until I can actually turn it blue. So we'll see if anybody's able to convince me over here. So guys, yours should be blue. You guys should be GFI there. Make sure that that's exactly what's on there. If it says anything else different, stop immediately. So when you go from the full page, you can do a couple ways. Go to the quote. Yeah, quote's going to bring you up to mostly all the products here. The most featured are going to be the most recent ones you probably use, or if you're newer, it's going to highlight the biggest thing that we have going on. And these are the options that you see here. Here at the bottom, you'll see all the products as well that you can also extend and kind of elaborate there directly. But we're going to jump into that accumulation IUL option here. And here, then we start playing with the basic illustrations that we talked about. Here at the solve options, you guys can see what we talked about. Express solve, that cash value is already defaulted and selected. I can switch it to max retirement or smart solve if I wanted to. There's the option for custom or import that illustration if I wanted to go that route there. So I'm going to keep it, I'm going to switch it over to max retirement because I want to show you guys those distributions. So I'm going to start off with the express solve option, right? This is going to simplify and keep it easy for us here. I'm going to do mail. Let me see what we got. I was working with somebody here before. I'm going to use that date of birth. Non-smoker, guys, I promise it's just sick. I'm not a smoker, even though I sound like this. I want to make sure, state of Georgia, that's where I'm located. I'm in the East Coast, guys. So over here, nice, enjoying nice 28-degree weather here in Atlanta. So we're going to go here. Classes that we select here, prefer plus, and standard. This is something that I always like to point out. Guys, remember, this is a quote. We're getting a price, an estimate of what could be for the client. So I always get questions saying, hey, Jorge, I did a quote for this client, but why did the price come out more? Because it was just a quote. Until we don't run the medical records or the history for the client, then we don't know what the actual condition is. So that price could theoretically go up or could go down based on their health conditions, right? Or if they're rated. So that's probably why you'll see a price difference between the quote and the approval option. Specifically, if you select a class with Preferred Plus and that client gets rated a standard, then the price is going to be significantly different. You'll still be able to make adjustments to the policy after it gets accepted under a different class, but kind of keep that in mind when you're going to be able to estimate a client. So again, the other side of it is you guys are field underwriters, right? When you're a field underwriter, that means you need to make sure that you're listening to your client conditions, things that they're talking about. We do a basic concept of BMI. So we have our BMI that you can look at the chart and it goes into these. You can jump it in into any BMI calculator you want on Google, just height and weight, and it's going to show you what that BMI is. That's a good baseline to kind of go off of. If you guys are going to be looking at the agent guide or the knockouts, for example, here on the knockout guide, it even breaks down a little couple more details, whether it's income based, where what they can qualify for, some medical conditions that these are non-medical knockouts. These are one to make sure you can see when it comes to criminal history, any drug or alcohol abuse, violations, DUIs. These are things that if it's in their history, you can go straight to the knockout guide. And again, we can see limits on BMI, any disorders or medical conditions that are going to be flagged, or even our current flag of medications list. So, guys, we give you guys a list so you guys can come back on here and reference these are the red flags. So, we want to make sure that not to say that we're going to make sure we 100% reject them, but these are definitely going to be flagged up and either it's going to maybe trigger a manual underwriting. Because again, I talked about 90% instant decision, right? But again, man, the other 10% is we can trigger a manual underwriting process as well. So I want to make sure that we might have to ask additional information to confirm some things for the client there. So I want to make sure here, another one of them that always comes up on the knockouts, prior insurance activity, a max of 4 apps from non-Ethos carriers in the last 12 months. I hear agents all the time saying that, oh, Jorge, I ran 3 apps at the same time for this client to get the best quote. That's like saying I applied for 3 credit cards to see who gave me the best limit. So again, the more you run on the credit, the more you run on the MIB or the history for a client, the more it's going to trigger on that end. So it's the same thing for us. We're not the only carrier that uses this aspect, but again, our max is 4 within the last 12 months. Because when you're triggering that, we need to know is like, hey, why are they so interested? Obviously, they want to get coverage, or are those other carriers not qualifying them there? So that could affect as well is your credit. So these are knockout commissions, knockout impairments that can avoid. So keep that in mind when you're doing the application, when you're answering these, or you're selecting the rate class for your client. The other benefit on the rate class is you're saying, for it goes down. Can it also go up? Meaning that if I select someone that's standard, but our system qualifies them as preferred or preferred plus, then yes, we can definitely go and offer them a better price. So it can go either way as well. So you could have done that and it can give you that solve. So today, I select this preferred one for this scenario. I already did my express, and I'm going max retirement income on this one, right? I'm going to hit continue, and then I'm going to solve for coverage. So now we're looking at these different options. I can select for coverage, meaning that if I'm solving for coverage, I know how much premium I'm going to add into this policy or how much premium the client wants to add into this policy, right? So these are the options there. Or what say if I want to flip it? I know the client needs or wants a certain amount. They want 400,000 in coverage. So because I know they want 400,000, I want the system to let me know how much we need to pay into this policy to be able to get that 400,000 and get that balance and get that accumulation focus still there. So we can do that. So that's the option there. Target premium. If we want that premium to be the target, so we can select this option here. But again, if we're selecting this to be the target, that's something to keep in mind into making sure that we're doing the best option, or that's the scenario that you choose to select for your client in that case. The more common one, and even for me that I like to work on, in IUL, I always focus on coverage, and then I focus on what premium I can add in this product for contribution. And guys, this is probably going to be the most common, simple way that you're going to see it. Because the client's going to tell you, all right, we were able to work something out. We can probably put in, again, $400 into this product. I'm going to select, it's already pre-selected when it comes to option B with the switch option. You have the option to go select level or increasing. Level is just going to keep that death benefit fixed. That increasing is going to increase the death benefit it's going to increase that death benefit as the accumulation is growing. But if you stop contributing, that might not be the best long-term plan, right? So this is why we selected the option B. We're going to increase the death benefit as the cash is increasing, but at the moment you stop contributing to the product, meaning you stop paying premium into it, that's where we're going to switch it to A, which is level. And we're going to prioritize the cash value and lower that death benefit because, again, this is an accumulation focused product. So the priority is on accumulation. This is why this option is already selected and defaulted from this perspective here.
Can I interject real quick? I have a quick question because I know with North American on their this option, when
Uh-huh.
a client doesn't pay premium, it's automatic. Is it the same with Ethos doing it through Ethos with this option?
When it's automatic in the sense of when it stops because of that particular product, it is automatic. Well, this is automatic because it's selected that way there, but
Got
you
it.
can
Yeah.
still change it. Yes.
And you guys, I want to highlight that because most carriers, it's something manual that has to be done. So agents have to remember to go switch it to like stuff like that. This is done automatically. So when your client is like, I'm done, I've already funded it for however long, no one has to remember to call in to switch that. That's one of the beautiful things with North
Yeah.
American.
So it keeps it simple for that, and then we're designing it like that way from the beginning for that reason, so they can see how that's structured. So good call out there. So we got the option here. Now I can select how long I want to pay into this product. Obviously, this is someone younger. I went with someone 94 here at this point, to the late 1900s here. So if I want to take it to age 64, then that means they're going to probably retire at age 65 and take some distributions. This option, you can edit it in any way that you want. I put as values because it's going to trigger. If I ever put in something wrong, or something correct, it's going to let me know right off the back here. Hey, the minimum age you have to do is 31, and the highest you can go is 119. So it gives you those options right into the policy there. But again, this is when they want to retire. So if they have a short-term strategy, you can do a short-term strategy. If they want to do a long-term strategy, they say you can. You can switch it into that. Instead of age, we can do years. If they want to do years and say, hey, they want to pay 10 years into this policy, perfect. We're going to do 10 years. Or on this scenario, they want to do 30 years into this policy, right? So that's fine. We're going to take them 30 years into that policy. Whatever option they want to go into, you're able to select and you can switch between the options here, age or years into the policy. So I'm going to keep it age. I'm going to say I'm going to pay into this policy to age 64. This client wants to start taking distributions at age 65 for their retirement, and we'll do it that way there. Now we have the options of going into advanced settings. In advanced settings, even in custom solve, you have the option to be able to switch it from monthly to annually. Also, level to non-level premium. And this is where you can make small modifications to the premium that you're going to be contributing to the product. Let's say they want it. We set it up at $400. What is it, 450? But let's say for 31 to age 35, yeah, they're going to do 450. But from 35 to 45, they want to jump it up and go 550 at that point in time. And then they want to keep going and say, hey, 46 to 55, and I want to go 650. And you know what? Right at the end, I want to really go high. I want to do it that way and get more contributions. The other thing is I can also flip it. I can go high and I can go lower. However you want to design it, these are those options where you can fine tune and fit it to what your client's looking for. So again, same thing with in the answer. This is going to be automatic. It's not like they have to call in and say, "Hey, I'm ready to start playing extra," or "I'm going to put my increase." The policy is already designed to this way, so it's automatically starts taking that new payment at the selected start age there. Even in custom in this express option, you can still do that lump sum. So if I want to do that lump sum amount, this is where I would put that lump sum. I said I've already done some illustrations here. You can see. Let's say someone's coming into some money, right? They're going to say, "Jorge, you know what? I don't have it now, but I'm going to have it in 2 months. So it's going to be in my account. Don't worry. We're going to wait the 2 months to make sure it's in your account on month three of your policy, I'm going to make sure that at that point it's already in your account. Hopefully, you didn't go on a shopping spree. But on month three, we're going to take that payment out to make sure it gives you enough time to clear it on month two. In month three, we can take that lump sum out. But we're going to start the illustration now with that option there. Perfect. Now we've already added that three. And this is the part we talked about compensation. We can't accelerate the comp on this option until that month three when that gets triggered. Once that's triggered, then we're going to be able to go from there. So now I've selected that. Now it locks in those values that I just selected there for that non-level premium design that I did there. Now I want to go into the index option. On the index option, it's exactly what we mentioned before. We talked about those index accounts that are on there. I already defaulted them 50-50 split. That's going to be the option there. Here you're going to see that you can select either where you want to go. Let's say I want to do a different strategy. We're going to do a different strategy to select more accounts options because we selected that. It's automatically going to already allocate those differences and be able to split it up between all the indexes that you selected. Or let's say I want to fine tune it. You know what, Jorge, I like this option, but I want to go more of an 80-20 route for this client. No worries. I'm going to do 80% there, 20% in the high par. As long as my total came out to 100% allocation, this is going to do it. And the great thing, guys, you guys don't have to be math whizzes, right? The system's going to let you know if it's anything wrong. So anytime it's red, you look at that and you can fix it quick and easy and you can kind of go from there. Once you've locked in the illustration value that you want, you can save those options there. And then we can kind of move into the next one and go into the disbursements. On disbursements, it's talking about loans. In this scenario, I selected the retirement income. So it's going to give me those distributions of those disbursements that we want to take. Like we did, it's going to default on that fixed participating because we're going to talk about taking disbursements later on into the retirement option, right? So how it's going to do, or if I needed to take them sooner, if they want to illustrate taking them out sooner, I can also do those illustrations there too. But we're going to keep to that fixed participating because this is how we're going to design. We're going to keep it to loan. I can even switch it if I wanted to. So meaning that I can go from a variable to a fixed within different bases if I wanted to switch those options. You guys can do within the loan there. Here we're going to do the amount of distributions. It's already going to select age 65 is where I want to start taking these. And it's going to default to age 84. You don't have to take it there. Let's say from age 65 to age 80. or maybe I only want to take something out into age 75. For 10 years, I'm going to take the money out from this policy. After 10 years, I can see where I'm at if I want to keep taking distributions or if I want to go a different route from that perspective, right? All right, perfect. So now we selected those disbursements there. Then we can go into riders. Riders, here are the no additional cost options that we already have here. So no additional cost, already included. What we talked about, there's a couple options at an additional cost. Whether it was the accidental death benefit, we can add in those additional value there. Or if I want to do in that waiver, a monthly deduction option there that we talked about here, right? This is a deduction for each month if the insured is totally disabled and total disability begins on or after age 60, or the month deduction is waived at age 65 at that point. If total disability extends to age 65, all further deductions are waived. So again, we want to make sure that again gives them additional coverage if they needed that. You can add that if the scenario really suited that client and having that situation. And we just simple as checking a box, hit and save, and going on forward there. So literally I can put it in the scenario and say, hey, let's put it on there and go ahead and lock it in there. Once I've done all my values, then I can just generate the illustration. We're gonna hit generate and we'll go from there. So let's do that there. And here, already triggers a great graph right off the back. Gives you the non-guaranteed income because obviously we're going to use an assumed interest rate of 6.51 is what we're talking about. First year premium, initial coverage that we're talking about there. We can see at that point there. We talked about 11 years into the policy or just at 10. We're going to good break even level here at this point to make sure that at this point they've already gone in more to what they've actually contributed into their policy. So now we can see that. I have a couple options now to look at the policy, whether it's view summary. View summary gives me a quick look. This is going to give you a quick look to be able to break down into the policy and say, hey, let's see the numbers that we're working with, right? There's the numbers. This one's 15 because we added an extra 10,000 in the first year. That makes sense. We're looking at the numbers. Here's the increase. There should be another increase, and there's that last increase. Also, we stop paying into it at age 64. There's that last payment there. And at 65, we started taking those distributions there. 100,000 that we're going to be taking in distributions a year based on the scenario we just created. And we can see accumulated value that still continues to grow after we've taken those distributions for those 10 years that we illustrated to the point we can go further, guys. If they want to keep taking it out, they can keep taking that out option, or they can go out at age 75 and say, you know what? Let me just cash out and take out as much as I can. They can choose whatever option they want to go at that point there. We can also see where that death benefit also started going lower because remember, we're accumulation focused, not death benefit focused. So at that point in time, I can actually take out more for my cash value than I actually have in death benefit if I needed to use any of that, or if I want to advance in that in a different account. So you have those options and that strategy the way that if your client is trying to go there. So a good way to look at it. From another aspect, I can go into download illustration. This is where we're going to be able to see those detailed pages that we talked about, right? So I'm going to keep it simple here. Let me go right into the pages. First page comes off the page here. Here's the agent. Here's the information there. We're talking about the agent here. We're talking about how much that first year premium is going to be. Monthly premium payments are going to be coming in play there. The lump sum that they're going to be putting in. Page 2 breaks down the policy issue and how much the coverage we're going to have at that point in time. The coverage amounts that they can have at certain points to accelerate 75, 60 right there on the next page. And again, where they're going to be able to get when it comes to their projected and where they're going to be able to do for the accumulation that they're going to be collecting at age 65. So they're going over 700,000 that they're going to be collecting in that 10-year period that we illustrated. And they're going to be able to receive close. We saw 100,000 a year, right? Over 8,000 monthly that's going to be able to do this accumulated option that's going to be able to come into play of 1.1 million through that time that they've done in the play. So at age 65, they have that 706 over 700,000. But in those 10 years, they're going to be literally cashing out $1.1 million. All right, guys? Give me some fire emojis in the chat if you want some $1.1 million in retirement, right? So talk about giving that value, just showing it. Again, we've gone through two different pages of the illustration. This is my recap pages, right? This is great conversation points there. I can recap the indexes that are in the policy, the ones that we've selected from the first two options there. We can break down a little bit more how your policies grow within the first 10, 20, 30, or 40 years, attain age and what we're going to be at for all those different options there, how we're going to be taking that retirement right now, all that example that we're cashing out here, what we're going to be playing in under these options. So, guys, keeping it incredibly simple, easy. But again, it's not always about the easy. I know some of you guys, if you guys love this business as much as I do, I'm a bit of a nerd for the numbers. So don't let the glasses just show you for looks. I like to jump into the additional pages and go in. I talked about the historicals. These are the historicals, averages to making sure you're selecting the right indexes for your client, the right strategy they want to do, whether it's a short term strategy or a long term strategy, right? Again, you have amazing leaders you guys are going to be learning from. So if you have someone that's age 50 or 55 that has a plan to do a 10-year strategy, because again, they started a little bit later, then we know we have to get more aggressive. So we might look at a different plan for a 10-year turnaround versus someone that has a long period of time for 30 years to grow into it, where we might coast in that high part. We might focus there because again, the average for the long term might be better from that perspective there. So this is what you use these historicals to come out with that game plan. This is when you're looking at the plays to see how I'm going to design this product for my client and make sure it suits them best. And then as you go further, you have the fun pages, the summary pages that breaks down the numbers even in more detail that comes into play there, right? Whether we're using that 6.51 rate, that fixed account that we have available at 4.50, or again, guaranteed minimum. So even at the lowest point, if things are going to go out with the interest and the bonus options that are available within the product, if we're going to go at that 2%, it shows you worst case scenario in the situation that can come into play there. So we're playing in that first. So we see that first 10 years. Then we go into the next, what comes in that first 20, and then the next 30 into the product. And we see the numbers as they're growing on that side of it. And then lastly, we see where we stopped at age 64. So the client out of pocket paid over just 267,000 into the product, but not even in 10 years. In 5 years, they're already pulling out 600,000 in returns from that 267 investment that they went in. And guys, we're only doing a 6.51 illustration rate. Let's go back to those indexes that we talked about. If we're averaging higher, all these averages within the long-term span, if you select the right strategy, 7.4, 11.4, 9.3, these are the strategies that you guys are selecting to work with your clients. So the numbers that I'm showing you here are non-guaranteed assume rates based on that 6.1, because how the market's set up, we can't guarantee, we can't say that it's going to be that, but we use a good baseline value. And I hope you guys can see that 6.5 is a very conservative and a great option to work with that we're using right there. Under promise, over deliver, exactly how we want to do. Because again, these are things to look out for when it comes to, again, other carriers. You might have other carriers that might do the reverse. They might over promise and under deliver, right? They might show illustrations. This is why it's more regulated than ever that we have great assume rates and great options. Because again, there might be carriers that still give you 12, 13, 14% assume non-guaranteed rates on these illustrations. And you guys can see on those averages, even on the long term, we weren't hitting those numbers directly there. So we see the option. So these are all the breakdown illustration. This is the option on the again on that custom max retirement income there. So this is the option there. If I wanted to jump into the next option, which is the custom solve, boom, a custom solve now it takes away some options there. But when I move into the next screen, then I have a couple of other options to select. So from coverage for solving, now I'm not just having premium and coverage. Now I can do years to pay, lump sum premium strategies, income solve strategies. Guys, we're working on an actual new guide that will break down all of these options for you guys here. But the most common one that you're going to see on these options are going to be here are going to be no soft if you want to really fine tune your own death benefit, or if you want to fine tune your own premium within those options there and create that. You can even create those non-level coverages. So if you want to increase or decrease the coverage within the years, you can do that in non-level options, just like we did the payments. And you can balance that out with non-level premiums to really, again, fine tuning those on those options there as well. So you're going to see those options there directly. So here you can create those as detailed as you wanted to. If you want to go into the different solve options, you have those options here. But these are the key ones. One of the big ones that again GFI was asking for. So we made sure we created that option here for you guys directly. Here, as you guys can see, it doesn't default as much things as we saw before. So it automatically keeps it at level increase. There's the option to the C where we can go ahead and do the other strategy. But again, because you're fine tuning this policy, we want to make sure that you create the correct strategy, especially if you're going non-level in what we're selecting on these death benefit options. So I wouldn't play with this option unless you're a little bit more versed in these options of what the solve options are going to be able to do or what you're truly trying to achieve for your client. Under the advanced settings, you have only the option to be able to do monthly, quarterly. So you have the option of additional payment modes here that are available here for this strategy there. The indexes is going to work the exact same way. Disbursements, here's where you have to turn them on or turn them off. The reason that you would enable them is, and again, if you're going to be using Agency Rocket to upload this illustration, you need to enable disbursements, or else it's not going to be able to illustrate for you guys in the application there. So this is very important to have. So this is the only option here. The rider process, the rest of it is all going to be on the same thing. Guided level premium options, cash accumulation test. You want to make sure that it's going to make it through a certain point in time. So these are where you're using these tests to make sure that that policy is making it to the point if you're going to be adding additional options into it. So again, advanced strategies, advanced plays, if that's what you're looking for, if that's what you're trying to create directly for your client. I think I see some options that are jumping into the chat. Make sure I'm not missing anything. I think
No, it's just a couple things I would just say, just to highlight you guys. I think that the first solve is a very common solve. And George, a lot of the times our agents will either start with target and then overfund above that, or they start with max. And sometimes, most of the time, clients want space. Most of the time, you're going to sit with clients and they're looking for the possibility to add more. And so the design will go accordingly. But I
yeah,
would say that if you guys remember the first one, that he did. That was protect. I think you did the first one that you ran at was for. I have it in my notes here. You solved for coverage.
yeah.
Was the one that he did, and it was like a express solve, maximize retirement coverage. I would say that. And if you guys want to start with target, you can, right? And then you can always, once you see what that is, customize what the numbers are by changing the way he showed us those contributions in there for that. So that gives you that possibility.
And
Or
you,
actually, you could start with
yeah,
Target, right? And then you
yeah.
can.
And you can still do that even on the custom side of it. So you can still do
Okay.
coverage and you can still do target here on coverage. It even lets you do more coverage solves. Again, more options. We're going to do target premium with max distributions. However, you want to maximize your clients, your option, whatever strategy. But if you guys are using the target premium version here, then you can select literally fine tuning it throughout all the different policy years. And it'll let you add about 5 rows here where it maxes out. Oh, actually, we've added in more. Look at that. So you can really fine tune as many years as you want to go into the illustration app that we didn't have before. I honestly didn't know that update already hit. So
This is awesome. Hey, George, this was really, really, really good for us. And you guys, I'll be sharing the recording because I think all of you guys, this is something you might want to like rewatch. And I'll definitely send that out, if not by tonight, by tomorrow. I do have one last question,
go for it.
and that's reparenting. I know, so our organization has been bringing agents over from different firms, and oftentimes they might have had an Ethos account but never wrote any business. What is the reparenting guidelines with Ethos, and what is the time frame of that if they are eligible for reparenting?
Great question. So yeah, so if you're coming from another one, then you want to make sure that you want to get reparented as quickly. If you wrote any business with your last company that you're coming from, if you wrote anything within the last 12 months, then you would have to wait. How you have to wait. So if you wrote a policy 2 months ago, then from that last policy that you wrote, you have to wait a total 12 months before you can even repair it with Ethos. And after the 12 months, then that's when we can submit that point of reparenting from there. So it's very important to making sure that you do that. A lot of common things that I see on this is that, hey, I didn't even know I had Ethos with my last company, but I came to GFI, I logged in, I assumed that this account was the one that's connected, and I wrote a policy. We're really strict on the rules and the guidelines that we have. So if you accidentally write a policy, it still counts under those reparenting rules with the last company. So you still have to wait those 12 months. So I make sure I emphasize, if you guys caught my joke in the beginning, when you see your portal, there's a reason that GFI is custom blue. So you want to make sure that if your portal doesn't show blue GFI right there at the top, then you need to stop immediately and reach out to me, Cindy, to make sure we can get you reparented as quickly as possible and get that submitted. And all that is a quick little email that you got to send out to our service department with your name and PN. There's a basic like template that you got to just send out. Very easy to get it done. So it only takes a few days to get that process.
Could you provide that email? Because I know a few of us have tried to have a few of them get processed, but it's been a little longer than that. So maybe we have to look at where we're sending that to. Could you provide that? And again, just to clarify, if they never wrote business, it's not a problem. They don't have to wait 12 months.
Correct. If they never wrote business, they never have to wait the 12 months. They can just submit that reparenting. And I'm literally going to drop the full reparenting template with the email. And I always say, copy me on the email as well, because I can help prioritize it. So if you guys look at the chat, that's exactly what we do for the reparenting. So reparenting only with Ethos. Not no, correct. Only with Ethos. So Ethos being us, the carrier that you're going to be working with, we need to make sure we switch you over from the last company that you work with to making sure you're working under GFI. Because again, we don't want to make sure that business gets submitted under the right company that you're with. So that's the template. You literally just copy and paste that, add your name, your NPN number to that, and send it to the both emails, our agents at getethos.com, as well as mine, to make sure we get you reparented as quickly as possible.
Could you text me that, George, too, just so I could add that? Because it's not letting me copy to add it to our chats as well, if possible. I don't know if that's
Yeah, I'll send it over right over.
okay.
No worries.
Awesome. Or if anybody else has that, you guys can post it in our group me or something like that so we could have it. That would be helpful. All right. Well, thank you so much for this training. It was, I mean, you guys, by the way, something you probably want to talk about it. It's your last slide, I'm assuming. I see it coming up, the $100. I don't know if you talked to
Oh
it.
yeah, sorry, I didn't even realize I was sharing the wrong monitor here. So yes, let me switch it over. Ah, man, what am I doing? So switch to this monitor. Yeah, there you go. So yeah, this is what's coming up here. So I want to show you guys that right now for the month of January, we have an additional $100 for every accumulation IUL that you guys are selling right now. So if you guys want to not only learn a new product, but make a little extra, you guys can do up to 10 policies, get an extra $1,000 still here by the end of the year by submitting this North. And all you're doing is just submitting business like normal. So on top of your regular commission, get an extra $100. And guys, there's already people that have maxed out the 10 this month. So if you're thinking it's not possible, I've already done it. And we're only, what, 19th of the month right now? And I've already had people that are maxed out. So within like the first week of the launch, we had like our top 3 to hit 8 policies right in the first week, guys. So then this product, when we talk about how game changer it's been to agents, they're showing it already in the field and how their business has changed by submitting one of this new product. So guys, take advantage of it. It's a great what to work with. And if you guys have any questions, again, hopefully you got my information, my QR code's here on my shoulder. And again, I'm here to help you guys out. So thank you guys again for giving me the opportunity to be here with you guys this evening, and we'll stay in touch.
Thank you so much. This was incredible.